Okay, the company in focus is Castrol India. Very strong set of numbers that came in, margin beat, also the bottom line coming in much higher than what was anticipated. So strong numbers coming in. Let's get in the management now. Omer Dormen, the MD of Castrol India, now joins us. Good morning, Omer. Thank you so much for joining in. Firstly, if you can give us an indication of how much realizations panned out, what were the realizations in the fourth quarter, and also if you can actually highlight for us what were the volumes in the fourth quarter?
Hi, good morning. Good to be on your show. Thank you for inviting me. First of all, we're really pleased with the progress that we made in 2018 against all the strategic measures that we've been focusing on. We made huge progress around brand investment, where we invested into 3 of our brands in terms of advertising spend. We expanded our distribution. We introduced a number of new products which contributed to the growth, and we also invested into mechanic advocacy. And it's good to see that all those inputs and strategic drivers have delivered strong growth despite a really challenging and volatile market. We took measures in terms of margin management, price increases, as well as cost efficiency and saving. And in Q4, and if you look at 2018, we've delivered 4.5% volume growth. The good thing is the growth is coming from where we invest, which is our retail, which is our biggest contributor to overall volume. The B2B business has been flat in 2018 because of some of the volatility that I talked about. And in the quarter 4, we managed to grow our revenue, hold on to our volume versus last year, and 2017 was already at a high base, and despite all those challenges and a softer economic conditions, we held on to our volume and delivered a strong bottom line. So if I look at 2018, we're really happy with the performance. So I'd like to take this opportunity to thank the entire team as well as the distributors and suppliers of Castrol India.
Omer, the other thing is margins have expanded, and you spoke about price hike that came in. What was the price hike that came in the fourth quarter, and what was the benefit of lower crude prices on the margins?
So we took 3 price increases in 2018, and 2 of them actually came in Q3, so which was the September quarter, and I mentioned that in the previous interaction that we had. So of course we saw the benefit of that in Q4. The softening of the crude, we didn't see the impact of it yet. So we're going to hopefully see it in 2019. But we also expect 2019 to be quite volatile because the crude, as you know, went down to 50. It's now back at 63. It's the geopolitical conditions are really determining what's happening on the price of crude. And there's always a lag between crude and base oil prices. The other thing, of course, is the volatility of the forex, the foreign exchange rate, and that's been also quite volatile. If I look at 2018, we had about 200 crores of input cost increase. Only 45% was base oil. The rest was additive costs, packaging costs, as well as forex.
The other thing that we want to ask is that given the slowdown that we've seen in the auto space, how do you see volume growth panning out in 2019?
So we remain optimistic. We hope that this is just a temporary blip. We look at the real terms in the market, and those haven't changed. The key indicators are quite solid, and we expect the market to continue expanding over the next 5 to 10 years, between 2 to 4%. That's why we're quite optimistic, and we believe that we're going to continue growing our volumes at around 5% going forward, which is above the market rate.
And what about industrial business? On the industrial side also, things don't seem to be shaking up well for the industry as such. How do you see the industrial segment growth and the impact on your business?
So as I mentioned, in 2018 we saw volumes remaining flat in our B2B business, especially on industrial. We've seen some headwinds in industrial. We've seen in the last quarter, we've seen a really drop in the industrial production index, which is also impacting us directly. Going forward, we again, we expect infrastructure development to continue, and with Make in India, we're still optimistic that industrial production will pick up, and our expectation that the growth will continue in industrial once we get over this blip.
Any new contracts that you managed to win in the fourth quarter, and any expectation of a big contract coming in the first quarter now?
We have a pipeline of new customer acquisitions, and of course I mentioned that we expanded our distribution. We now reached 150,000 touch points. So in 2018 we were able to build 150,000 touch points, which is quite a significant increase from 80,000 we were in 2016. So we continue expanding that, but at the same time, at a high level, as you know, we signed up with Mahindra tractors in the retail sector, and we have also some work, and hopefully in the coming weeks and months we'll be able to announce them as well.
What about the new capacity that's being added? When will the new capacity start flowing into the financials?
So we're really pleased that the board has approved the expansion plan in Silvassa. That's going to add 50% more, so that's about 40 million liters of additional volume, which is going to come in the next 2 years. This is based on our volume projection, and it also supports our strategy where we're investing into new products as well as the personal mobility. In 2018 we've seen our power brands grow by 9%. Which is again in line with our strategy. But looking at the projection for the next 5 years, we've realized that our capacity is not going to be able to meet the projected volumes. So that's why the board approved 140 crore of additional investment into Silvassa, which is our state-of-the-art plant anyway. But so hopefully that's going to be available in the next 2 years so that we can meet the demand that we're seeing in the market.
Okay, Omer, we'll leave it at that. Thank you so much for speaking to Bloomberg Quint, and all the best for the quarters going ahead.